was the fact that today was a quiet day out there, forming an inside day, a huge warning of something about to hit stocks tomorrow. Now, before we talk about what could be hitting stocks tomorrow, we come over and look at how the indices fared across the board. The Dow was down 165 points, NASDAQ up 5 points, S&P 500 down 4 points, with the Russell 2000 being up 1.52. We come over and look at advancing issues versus declining. We had 58.1% of issues advancing on the day. And then when we come over and look at the sectors, by far outpacing everything else was energy. The laggards out there, consumer defensives, and utilities. But if we look at this, we had a few more sectors in the red. We only had 4 of the sectors actually in the green today. But going back and looking at this, you would think that everything was a lot more bullish with 58% of stocks advancing on the day. However, if you look at some stocks out there, let's say Amazon, absolutely getting destroyed out there, down 1.84%. So why was Amazon down so much today? And it had to do with this article, Amazon Prime Day sales down on first day, pressuring shares. And the reason for this is people are starting to get concerned that maybe, just maybe, the consumers are starting to slow down. Look at this chart right here. We can see once that news was announced, we see Amazon taking another plunge lower on the day. However, it wasn't just Amazon on the way down. If we look at Goldman Sachs, down 1.92%. We take a look at JP Morgan, down 3.15%. And even Wells Fargo was down 0.91%. Now, if the stock market is going to continue to rally, you do not want to see the financial sector having a hard time out here. Even look at XLF today, down 0.89%. Well, if we come over and look at why JP Morgan was down today, we can see JP Morgan stock is fallen. And what this article goes on to say is it had to do with downgrades. Next week, the banks are going to kick off earnings. And with that, they're starting to already get downgrades ahead of time. So are we about to see some turbulence in the stock market out here next week? Now, when we look at the economic calendar, we had no major news on Monday. No major economic news on Tuesday. On Wednesday, people are like, hey, watch out for J-Powell. We have the FOMC meeting minutes. But what if I told you guys the FOMC meeting minutes might not be the big catalyst out here for the stock market? If we come over and look at this article right here, Treasury rout grows as tariffs and supply test demand after tax and spending bill. And what do we have coming on at 101 tomorrow? We have that 10-year bond auction. So what if we start to see that maybe, just maybe, there's not as much demand for the US debt as the government believes there is? For instance, we look at the 10-year yield. 10-year yield over the last couple of days have been on the rise up, and we still have this complex ABC pattern on the way up. That target is right up here about 4.86. Now, where that pattern gets invalidated would be if we come all the way down towards the low at 4.12. If that pattern breaks, watch out, yields will be going down. Now, yields going lower normally is favorable for stocks. Lower yields, stocks have less resistance on the way up and continue to go up. Now, we come over and look at gold. Gold down 30 points on the session today. Now, that kind of has me scratching my head a little bit. Why was that? Because we look at the dollar index, basically formed a doji candle or a spinning top candle, wick on the bottom, wick on the top with a basically small body candle. So dollar didn't really go anywhere. Dollar went down and gold went down as well. Something else we have to fear. Look right over here. HG, copper on the move higher. Copper all-time highs. Look at copper on the monthly chart. Now, you might say, Mike, no big deal. Everything's at all-time highs. But why did copper go up today? Trump imposes a 50% tariff on copper today. You can see this chart right here. Once that announcement came up, copper went up 17% on that 5-minute candle. Put this in perspective. Here's copper on the 5-minute. Look at that candle all the way down here from the swing low, all the way from the low, all the way up to the high of that candle, 17.5%. That is absolutely massive out there. Now, with copper going up, is that going to be inflationary? Because I can think of a lot of things that actually use copper. Now, with Trump reviving the trade war again, why are investors not panicking yet? Yet being the key word. And we know it's all about taco. Trump always chickens out. But Trump has vowed today during the cabinet meeting, he is no longer going to be kicking the can down the road. The August 1st is going to be the deadline, but he also said that about July 9th. So let me know in the comment section down below, will the August 1st deadline be the final deadline, or do you think there's going to be more cans to be kicked down the road? We can also see 12 countries have already been sent out letters ranging from 25 to 40% with possible 70%. And within the next 2 days, the EU may receive a letter basically saying, hey, guess what? Here are your tariffs. Take it or leave it. And, it is what it is. And let's talk about this real quick. If Trump does indeed send the EU a letter, Is that going to be problematic for stock? Amazing deals out there. Apex Trader Funding, 80% off all evaluation accounts. My Fund and Futures, 50% off first-time users. Tradeify, 50% off first-time users. And 35% off reoccurring purchases after that. Use promo code Mike. If you guys want to trade with a prop firm with the best payout policy out there, Take Profit Trader, right now, 40% off all the evaluation accounts. Best yet, no activation fee. Take advantage of these offers. Use the link in the description box down below. If we come over and look at the SPX, look at when Trump chickened out. The SPX was at 48.34. The SPX since then has went all the way up to 6,200. Even if stocks get a little bit upset with this and they start to sell off, have a bit of a correction, which is normal even in a bull market, well, guess what? Trump has a lot more pain for stocks before Trump is probably going to start saying, okay, maybe we need to go ahead and let's change some things up a little bit like he did over here. Maybe let's simmer the temperature just a wee little bit. If we come over and look at the SPY real quick, SPY basically having an inside day today. The low was higher than the prior day's low. High was lower than the prior day's high. MACD indicator, we do have divergence, but as we come over and start looking at the 30-minute chart, notice the MACD indicator is by the zero line. Now, this is dangerous. If you're looking to go short, this could be dangerous because the MACD indicator is flat and lined out. We can get ready to recharge for another leg up higher and potentially fill that gap out here all the way out at 625.34. However, this is also dangerous if you want to go long. This resting period, this contraction period could be nothing more than a pause to get ready for another leg lower in this market. Now, when we come over and look at the futures markets real quick on the 4-hour chart, notice if we grab our Fibonacci retracement, measure swing low all the way up here to the swing high, notice where the 38% level comes in, right near this high volume area right over here. One of the areas that I'm really watching in the near future is going to be up here about 62.38 down here to about 62.30. And I said this in yesterday's video, we had this A to B equals C to D pattern, which completed down here. I said, normally when the ABC pattern completes, the market does something other than continue in that direction. That could be pop up a little bit. That could be go sideways. Well, we did both. We popped up a little bit and then we had that consolidation today. Now, just to put things in perspective for the consolidation, look over here on the daily chart right here. What do we have? We had a 34-point range. And if I bring over the watch list real quick, which is something we talk about all the time on the live stream. Now, if you guys don't want to miss the next time I go live, make sure you subscribe. You have the bell notifications turned on for all. This week, we have more Take Profit Trader accounts to give away. But look at the average 14-day range. It's 58.75 points. Today, we only had a range of 34 points. So again, that is proof we had contraction in the market today, which in terms will likely lead to expansion. That's something that we always talk about with the D-shaped profile. Now, one thing to note with the D-shaped profile, the first way we break quite often ends up being nothing more than a trap, and then we end up going the other way. Sometimes we even get a double trap. However, if we start cracking really below value area low tonight, I do want to focus on the afternoon low at about 62.62. We breached that. Then I want to look at the low from last night during the Asia session around 62.54. Anything below that, go back towards the lows of yesterday, about 62.46. And then below that, we're looking over here at the high volume areas on the composite profile. Next, we jump over and look at the QQQs real quick. Qs also having an inside day, so expect a breakout or breakdown from this pattern. On the 30-minute chart, the MACD indicator is also down by the zero line. So watch out. That could be nothing more than a recharge point for another leg lower, or maybe a little relief rally to go ahead and fill the gap from last week. If we're breaking above value area high, I want to look for the market to retest today's high, then look towards that gap being filled. If we're down below value area low, I want to look for a retest of today's low, then yesterday's low. And then anything below that, I want to turn my attention over here to the daily retracement levels. 38% retracement would be the first area, about 544.45. We breached that, then the 50, 61.8, and then maybe all the way down here to fill in the gap. Now, as we come over and look at the futures markets real quick on the 4-hour chart for the NASDAQ, notice what we have. We have a D-shaped profile forming so far this week. Notice the 38% retracement and the 50% retracement from the low on June 22nd, all the way up here to the high of last week, fall right in between an untested point of control from 2 weeks back at 22,420. I think at some point the market will come back and test that. Now, is it going to be this week? I don't know, because we don't have a lot of economic news out here. Now, as we come over and start looking at the daily profiles, what do we have? We have that same D as in dog shape profile. Today, we had a 164-point range. The average range is 276 points right now. So we were well below the average range, which means contraction leads to expansion. So get ready, buckle up for tomorrow. Now, tomorrow, if we're trading below value or low, I want to target the lows from this afternoon, about 22,840. We breached that. I want to target the Asia session lows at about 22,824. We breached that. I want to target the lows down here, 22,781. Anything below that price point, I then want to turn my attention over here to the weekly profiles, and more specifically, right over here towards this little high volume node about 734. Anything below that, over here towards these candle wicks at about 22,594. Then the 38% retracement, then the untested point of control, and then the 50% Fibonacci retracement levels. Now, if you'd like to learn more about trading the volume profile shapes, then you want to make sure to check out this next video right here.